Well, Rhonda Staskow is senior currency analyst at Action Economics, and she joins us now live from San Francisco. Rhonda, good to have you on the show. Let's start with the US dollar because, you know, it's not just the disappointing US consumer confidence numbers. It's not just the disappointing earnings either. I'm just wondering, after a nearly 2-week run-up and a hard run-up in stocks and in commodity currencies and in risky assets, do you think that in a number of those asset classes we're actually technically overbought?
Oh, I definitely think so. I think what we're seeing is not only the reasons that you mentioned, but a lot of people are cautious and they're taking profit before month end. But a lot of traders I do talk to are trying to find a solid argument for the performance of such evident dollar weakness in the last little while. And they're not convinced, and certainly they're not convinced that the risk trades, the risk appetite in Aussie, Canada, Kiwi is justified when you have a lot of central bankers saying, well, maybe things have bottomed, things aren't going to be really robust going forward. And so I think the market's very cautious of that, and that's why they've gone back into the dollar a little bit today.
I mean, I would love to know how much of the good news, maybe all of it, has already been priced into a number of these currencies. But I guess there's also the added cachet for the Australian dollar, and that is the fact that it is already a high-yielding currency on a relative basis and potentially going to get even higher yielding. What do you feel about the RBA's comments and where we're going for interest rates?
Well, I think they were very hawkish on one side because they were talking about concerns over a bubble in the housing market, which I thought was very interesting. On the other hand, they did say inflation was expected to stay quite low for some time, so it wouldn't justify raising rates. So I think they were really trying to balance both sides of what they're looking at going forward. But one key that the RBA always mentions is China, and I think the market has to look to the growing concerns about a big bubble in China, particularly in stock and real estate, that can be in a risk of correction, which would be a risk for the Aussie dollar as well.
Rhonda, the euro was under a little bit of pressure against the US dollar overnight, but from a fundamental viewpoint, does it still look a little bit overcooked to you? And if we see any moves back above 143, does that warrant a selling opportunity?
I think it is. There's been a good deal of talk that option protection is one reason that it's not going any higher. And I have heard a lot of reports of profit taking from long-term holders of euro for the reasons you say, that it does look overcooked. There's still a lot of warnings of many layoffs to come in the Eurozone going into the latter part of this year because demand has not picked up that strongly. And so I think the euro would be ripe for a correction in the coming months.
Do you also feel, therefore, Rhonda, that if on a relative basis the Eurozone economy is not doing as well as the US economy, that the Fed might be in a position to start tightening, or maybe tightening is the wrong word, using its exit strategy from all these stimulus measures earlier than the Eurozone?
Yes, I think that's always been the case, that the U.S. economy is a little bit more flexible. We still have the Eurozone economy, a group of different nations that are all operating under different stimulus packages and different regulations, and that's going to make it a little bit more difficult, I think, to rebound. So I think to that extent it is a little bit more positive for the U.S. going forward.
Can I just very quickly ask you about the $42 billion 2-year Treasury auction from last night, Rhonda? You know, sort of on a longer-term basis, not necessarily a short-term trade, but is this outcome the fact that foreign interest seems to be waning? That's definitely not encouraging for the US dollar, right?
Well, it's not, but if you remember, yields had shot up quite strongly in some of the previous auctions, and they got a little bit better deal, and the dollar was weaker at the time. This time they only have a slightly weaker dollar, but the yields aren't quite there, Rhonda? So it's understandable why they wouldn't be as anxious to buy.
Understood. Thank you very much for joining us. Rhonda Staskow from Action Economics in beautiful San Francisco.